Hello traders, this is Chris Capri with secondsguysforex.com. So today's video is a price action video. We are doing this video on how to trade breakouts, how to identify them, and how you can trade them from a price action perspective. We actually did a video called the breakout retest video, which you may have seen, but we've been getting a tremendous amount of comments lately on identifying breakouts from a price action perspective. And based on all those questions and comments, I felt it'd be a really good idea to give a video going over some of the more advanced price action or subtle components that are key variables you'll find contained within these breakouts. Now what we're looking at today is gold on the 4-hour time frame here. This is gold versus the US dollar. Many of you have been following the precious metals. I've been writing about for a long time, and we had this massive sell-off in late September that was reflective of the CME hiking margins. Now we can see in this sell-off here, we do see a subtle pullback to this very unique level here, 1750, and you can even see that there's a price action trigger right off this 1750 level when it pulls back. Then it continues the sell-off very aggressively to sub 1550. And then after that it forms a series of higher lows and higher highs. Now we have been writing for a long time about this and following this for months now, and we had mainly communicated that bottoms take a lot longer than tops to form. Tops are very rapid formations, whereas bottoms are much slower of a process. But we can see that there was constantly running into a key resistance here. We can see it kind of ran into it here, formed a nice price action trigger, ran into it here, ran into it here, building these higher lows, all communicating that a breakout was very likely. And we can see, let's draw us a little bit higher here. And we can see as we scoot along in the chart that eventually, even after rejecting off of it again, that eventually, even though it formed a couple lower lows with this one right here, actually one lower low with this one right here, it's still in the whole series of things, a series of higher lows, which is very common elements you'll see in a breakout. And what that's communicating to you from an order flow perspective is that there is a tug of war going on between the sellers and the buyers. The direction's not decided, but one side is winning because they're buying it up cheaper. In this case, it's the buyers. They're winning. They're buying it up cheaper. They're buying up before it gets to these lower lows that it did before, telling you, saying, hey, we're more confident in being long gold, so we're going to buy it at a higher price right now. And that's what's happening. That's a very common element in breakout formations. So that's one thing you want to look for. But then we have this little move right here, and this is where the real breakout happens, and we can see it makes a very nice run after that, breaking out these key levels. Now this is the second component from a price action perspective that is a very common element in breakouts, usually a very large trigger candle. Now why is a large candle very communicative of a breakout? What this is trying to tell you from a price action perspective, or from an order flow perspective more specifically, is that when you have a range that is dominant, you do have sellers and buyers that are participating in the market relatively in equilibrium. Breakouts from an order flow perspective are usually the cause of one of two things. Either the sellers are still in the market, but the buyers come in with an overwhelming force to completely overrun the defenses of the sellers, or the sellers just completely exit out of the market. They evaporate out of the market, therefore leaving no resistance. Either one of those environments tends to create a very large candle when we break out of that key level. If the sellers are still in the market, it will trigger stops and therefore create a positive feedback loop. So that will actually increase price action and therefore be responsible for a very large candle. Or there were no sellers here, we didn't trip any stops, they're already out of the market, and the buyers just have full control over the market at that point. Either one of those scenarios will create a very large candle when you break out of that key level. So this is another component you want to look for when looking for breakouts of a key resistance level, this very large candle. Now as we zoom forward in price action, it should be no surprise that one of the key levels it went to was that prior 1750 level. If we zoom back, this prior level right here. So we can see that it went back to this prior rejection level at 1750. Now keep in mind there's a history element here. This has spent a very long time away from this 1750 level. The last time I was here was September 22nd. We didn't get back here till about a month later on October 27th. When we don't get to a level for a long period of time, that's telling us that there's a lot of force behind the selling pressure to keep it down. But if it's been a month since we've touched that level and then the market rejects off that again, that communicates that this is a very critical resistance level and possibly another level we should be watching for a breakout as well. Now, not surprising at all, when this thing rejected off the 1750 level, where did it pull back to? The same prior resistance level here. This is the same things we were talking about in the breakout retest. So when you have a breakout, often look for a retest of those levels that were prior resistance level before and to now be treated as support. This is called a role reversal level. It's where the market using money, and a lot of it, had said this was resistance before and then now is saying, hey, we're going to use this as support. This price action trigger is a very clear trigger for you traders saying, hey, we spent a lot of money considering this as resistance. We now consider it support. So we are viewing this level as key, but in a completely different perspective. That often becomes a great trigger to get back into the market, now changing directions. So we've seen that this is a major resistance level here. We should look for that same trigger, that same price action trigger right here, very large candle in the breakout. And look what happens after some very consistent buying and holding off the 20 MA. We see that again, another large trigger, another price action trigger off or breaking through this level with a very large candle, communicating again either strong buyers had overwhelmed the sellers or the sellers had evaporated out of the market. And this little thing that we had talked about, the breakout retest, can again offer a great opportunity for traders to get back in the market. Maybe you missed the breakout, that's fine. Look what happens, price pulls right back to that level. And it does so very timidly, telling us the sellers haven't come in very aggressively into the market. And if the sellers haven't come aggressively into the market, then who's in control? The people that were already in control, the buyers. And we actually blogged about this. We actually said, hey, watch out for a breakout retest of this level before it happened. And look what happened since then. That level holds, and we see higher prices since then. It goes all the way up to 1800. So you can see that not only the breakout retest price action setup that we had talked about before is a very valid setup. It's a common element you'll see just by drawing simple horizontal resistance lines. Find key resistance levels that are touched several times. Generally, you want some space to be in between them. The longer the time in between them, the better that resistance level becomes because it has a longer history. If it happens, candle, 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 all touching it, it's not quite the same as if it touches it, has a little time, comes back to it, has a little time, comes back to it. That's more significant. And so as you can see, these levels form of resistance become great support levels to get back in the market. This was a key resistance level here, breaks through with the very large candle, pulls right back to it, and starts another up leg. So that's pretty much it on this price action video here.